Hello everyone, this is Robert Aldana with Let's Talk Real Estate and robertaldana.com. I want to invite you, if you haven't had the opportunity, to visit my website at robertaldana.com. There's a lot of great videos, blogs, podcasts, and much, much more. And also visit my YouTube channel at youtube.com/robertaldana. Today we're going to focus on something that is really dear to my heart because I represent a lot of home sellers in this real estate market. And there are a lot of clauses in every single contract that are designed to protect both home buyers and home sellers. But if you're a home seller in this market, you already know that it's an active market and many of you are getting multiple offers. Most of the contracts that are used by the local board of realtors, and they have a lot of great clauses that are designed, as I said a minute ago, to protect all parties. But yet there are still some clauses that aren't part of these contracts that I really believe that you should incorporate in every single sale. If you're selling your property, you have only one opportunity, not several of them. You don't have an opportunity to say, you know what, I sold it, I didn't like it, let's go back and do something different. Once you sell that property, that's your opportunity to get you top dollar. So I'm going to go over some extra clauses that I feel are super important and will net you top dollar on the sale of that property. Let's get started. The 30-day rent back for seller clause. What does that mean? In many situations, if you're selling your property, there could be a situation where you are ready to move into your new property as soon as escrow closes on the sale of your home. There are other situations where you may not yet have found another home, or maybe the home that you are buying, moving up to, or moving down to is not yet ready to move into. So guess what? A lot of these purchase contracts, what they have in that contract is a clause that states that you will deliver possession to the buyer on the date that it closes escrow at about 5 p.m. But what if your new home is not ready yet? Do you really want to risk the chance of you having to be kicked out of your home when your home is not ready? Plan for the future. If you know or you're thinking that you may need some rent back, 30 to 60 days is not uncommon. I've actually seen it up to 90 days or even more. Most lenders, keep in mind, most lenders do not want to see a rent back for more than 90 days. But make sure you make that part of your contract if you are thinking you may need it. The repair limit clause. This is a really super important clause, and I'll tell you why. In many contracts, you as a seller are to provide certain clearances such as a Section 1 termite clearance, a roof clearance, and in many situations, you may think that your property is in excellent condition, and it probably is. But once a termite inspector comes out, they're going to find $3,500 to $4,500 in damage or more. I have seen termite bills over $20,000. So unless you put a certain limit, for example, if you were to say, we will provide a Section 1 termite clearance up to $1,500 or up to $2,000 or $500, whatever that clause, whatever that money figure is for you that makes sense, make sure you put it as part of the contract, because you could be basically giving them an open checkbook saying, I'm going to give you a termite clearance regardless of what the repairs are going to be. And what's going to happen if all the repairs will net you less than what you will need to buy that other property you're moving into? It's not a good deal, right? Make sure you always have a clause that states that there is a maximum amount that you will pay for repairs. The right to cancel and notice to perform clause. You should know that many contracts already have this clause in place. So there's a good possibility and probability you will see it, and there are some contracts that don't. What the right to cancel and notice to perform clause is a clause that protects you, the home seller, from a home buyer who is dragging your feet and not removing the loan contingencies, the financing contingency, and inspection contingencies. Real briefly, I'll explain what a contingency means. A contingency means I, as a buyer, am buying your property contingent upon the inspections checking out okay, contingent upon me being able to obtain financing, and contingent upon the appraisal, among many other contingencies that could be put in place. There has to be a certain time frame where the buyer has to remove those contingencies. If they keep dragging their feet throughout the whole period of the transaction, you're going to be in limbo as to whether you're actually selling this house to them or not. Protect yourself. Make sure that you have a clause that says, hey, if you don't remove your contingencies, I'm going to give you notice to perform, and you have 24 to 48 hours, whatever the clause, a time frame that you put in there, to either remove those contingencies or you have a right to cancel that sale. This is a very important clause and a clause that I think should be in every single contract that would protect the home seller. The above asking price appraisal clause. In this market, you as a home seller know that in many situations, people are getting multiple offers and they're actually being offered quite a bit more on their property than what they're listed at. And in certain situations, they're offered quite a bit more than what the property is actually worth. Why is that important to you? It should be important to you because unless the buyer is paying cash, which a lot of people are actually, but unless the buyer is paying cash, they could have an issue with an appraisal down the road. If your property is worth $600,000 and the banks consider it to be worth $600,000 by way of an appraisal, because that's what the comparables are saying, then the bank is only going to let the buyer borrow money based on the $600,000. What happens if a buyer comes in and says, I'm going to give you $750,000, and you're saying, that's fantastic, I love it, let's take this offer right now. But if the bank does not appraise that property for $750,000, which it probably won't, because if you know already that it's worth $600,000, you're going to have a problem. What you need to do is you need to make sure that there's a clause in that contract that specifically states that if the appraisal comes in lower than the actual sales price, that the buyer will make up the difference on the purchase of that property. So if it appraises for $600,000 and they're putting 20% down, which is $120,000 down, and the sales price is $750,000, you have normally, which would be a $120,000 down payment, now you have a $270,000 down payment that the buyer is going to need to come up with. And you need to make sure that the buyer has enough funds to make up the difference if the property does appraise for less than the sales price. The multiple counteroffer clause. This is a great clause for you home sellers, and I'll tell you why. In most situations, if you have a property that's priced right in a desirable neighborhood, in today's market, you're probably going to get more than one offer. You could get 3, 4, 5, 15, or 20 offers. What happens if all of the buyers of those 20 offers are fantastic buyers and you can't decide which one to choose? You can actually give counteroffers to each and every one of them that are either different or all the same and allow them to either adjust the sales price even higher or give you better terms or all of the above, right? Once all of the people, if 5 of the 20 people who get counteroffers or 5 of the 10 people get counteroffers come back at you, you can still decide which one you want to go with based on their qualifications. This is a great win situation for the home seller. It allows them to continue to market the property and allows them to talk to all of the buyers and say, hey, look, this is what I want to do. Which one of you is going to give me what I want? Okay, it's a great clause. You got to have it on there. And I believe that if you have multiple counteroffers, unless you already know that the top offer is by far going to be the best offer, period, then you should really consider the multiple offer clause. Thank you for watching this video. I want to encourage you to visit my website at robertaldana.com. There's a lot of great information and a lot of great videos. You can also read many of my articles that are on robertaldana.com. You can also read them at deadlinenews.com and realtytimes.com, among many other news agencies throughout the country that actually syndicate my stories. So if you get a chance, read some of my articles that are based on home buyers and home sellers in this market. And also want to remind you that I have a great e-packet. It's a home seller mega pack that goes over a lot of different strategies that every real estate agent should have to get you top dollar for your property. It's true. Maximum exposure equals maximum dollars. Every single real estate agent should have an actual action plan designed to get you maximum exposure, because at the end of the day, that's going to get you maximum dollars. Also goes over my report, the 31 don'ts of home selling, and much, much more. Get it all at robertaldana.com. Thank you for watching this video. It's always a pleasure serving you.